Top business stories live from the Sky News City studio. Ryanair reports a drop in profits, blaming higher fuel costs and its removal from some online booking sites. UK profit warnings are higher than during the financial crisis, with nearly 1 in 5 listed companies issuing one in 2023. Plus, a strong start to the year for the housing market, with Zoopla reporting a 12% rise in demand compared with this time last year. Good morning, this is Business Live with me, Ian King. We begin today with some breaking news this morning on the future of the car dealer Inchcape. It comes courtesy of our city editor, Mark Kleinman, who joins me now. Mark, what have you got?
Yeah, it's an interesting piece of news about Inchcape, this, Ian, which is that they have appointed bankers at Rothschild to explore a sale of Inchcape's UK retail business. Now, this is a significant step for Inchcape. It's largely a global distributor of cars, which is a much higher margin business than just focusing on retailing. But it would be a landmark step for a company which traces its roots back to the 1850s. As I understand it, Inchcape employs about 3,700 people in its UK dealer network, about 70 sites, that is, Ian. But I understand that the company has decided to explore the sale of its UK retail arm in order to focus on its global distribution operations. There's another reason why this is an interesting story at the moment, Ian, which is that Inchcape's chief executive is Duncan Tate. Now, he is under the spotlight as well at the moment because he formerly ran Fujitsu, the UK arm of Fujitsu, which of course is at the centre of the Horizon IT scandal, which led to hundreds of post office postmasters being wrongfully convicted. And there was a report in the Times last week saying that one leading investor was keen to quiz Inchcape's chairman about the role that Mr. Tate had played during his tenure at Fujitsu. So I suspect that the shares will move on the back of this news about the potential sale of its UK business, and it will be interesting to see how this unfolds in the coming weeks here. And one last point, if this sale of Inchcape's UK retail business does go ahead, it will leave only one remaining UK London-listed car dealer in the form of Vertu Motors after the takeovers of Lookers, Pendragon and Jardine Motors, all in the last 12 months.
Yeah, extraordinary situation that. Mark, thanks for that. Now, Ryanair has reported a drop in profits after tax to €15 million for the final 3 months of 2023, down from €211 million in the same period in 2022. Well, that fall reflected a €320 million increase in Ryanair's fuel bill and the fact that some online travel agents with whom the carrier has been in dispute have removed its flights from their websites. I've been speaking to Ryanair's Chief Financial Officer, Neil Sorahan. I began by asking him how long the latter situation would continue to have an impact.
We're already seeing it unwinding at this stage. We had a very strong first 9 months of the year, where we recorded a 39% increase in profits to 2.2 billion. We've already seen the likes of Love Holiday and Kiwi sign agreements with Ryanair, and we're seeing the OTA issue now starting to resolve itself.
To what extent have you been cutting prices to fill the seats?
We had to do a bit of that over Christmas, albeit that fares were up 13%. We thought they would have been up a couple of points more than that. Load factors were slightly impacted in Q3 as well. But as I said, an extremely strong 9 months of the year, and we're targeting record profits on a full year basis. I mean, the biggest issue we had in the quarter was not the OTAs, it was fuel. We saw a 35% increase in our fuel bill. But when we look into next year, we've already locked in meaningful savings on our fuel bill, where we're hedged at $79 a barrel, which is down from the $89 a barrel that we had this year. And that'll save us about €45 billion.
To what extent were you hedged during the third quarter?
We were over 90% hedged.
Right. So this wasn't a case of you being caught out. It was just the movements in wholesale prices.
Yeah, we were very clear at the half-year numbers that we were going to have a headwind on fuel. We had particularly low pricing in the prior year. I think we were hedged at $50 a barrel compared to $80 a barrel in the third quarter this year. So regardless of what happens, profits were going to be down year on year in that quarter, but we're looking at a bumper full year number.
Now, you make the point in the statement there could be further slippage of deliveries from Boeing in the current quarter. What sort of comeback do you have under those circumstances?
I'd be reasonably comfortable that we'll have 50 incremental aircraft in the fleet for summer of 2024, which is 174 game changers. So we'll have over 600 aircraft in our fleet. I was in Seattle a couple of weeks ago, and I'm happy with the assurances that I got that we shouldn't see too much slippage, maybe one or two aircraft. And then we'd be hopeful that we take in the balance of the 210 deliveries ahead of summer 2025.
Yeah, you do make the point in the statement that you have confidence in Boeing's current management.
We do. I think what Dave Calhoun and Brian West, the CFO, are doing it needs to be backed. We're helping them. We've sent over more engineers at their request, and we're working closely with them. So I think they will get there. We've seen a lot of the supply chain issues that they had after COVID has unwinded at this stage. But we welcome improvements in quality and hopefully more stability in production and deliveries as well.
It's important to stress, Neil, I guess, that you haven't ordered any of the 737 MAX 9, which was involved in the recent incident. You bought the MAX 8 and the MAX 10, but not the MAX 9. Why was that?
It was to do with the gauge of the aircraft. We were delighted with the 8200, the game changer, 197 seats. We've got maximum capacity on that. So we fit obviously all the emergency doors, and then the MAX 10 step up to 228 seats. So it boiled down to gauge on the aircraft and obviously pricing.
And you do make the point in this quarter, you think capacity across Europe might be impacted because a lot of your competitors are grounding Airbus A320s just now.
Yeah, very much so. There's a big issue over on the A320 side with Pratt & Whitney engines. GTF engines are going to be off wing for between 250 and 300 days. So we're seeing about 10% of the A320 short-haul fleet not flying this summer and likely not to fly fully until 2026. So capacity is going to be constrained. I think we were at about 94% of pre-COVID capacity last summer. We'll be about 92, 93% this summer. And demand remains as strong as it was, if not stronger.
Now, you do make the point, you remind everyone in the statement today that the current quarter, January to March, is traditionally your weakest quarter. What are you seeing right now?
Yeah, I mean, we're seeing strong bookings, but we do have high fuel in Q4. We've got the unwind of free ETS allowances, but there's a benefit of Easter coming through, which means fares are going to be up. Revenue will be positive.
And looking further out, how's the summer looking?
Summer's looking good. Bookings are very, very strong. We've locked in 450 million euro in fuel savings, so that's going to help on the cost side into FY25. But I think we're looking at a strong summer ahead of us.
Nearly 1 in 5 listed companies issued a profits warning last year, a higher proportion than the peak during the 2008 financial crisis. That's according to analysis published today by the consultancy service EY Parthenon. Some 294 profits alerts were issued in 2023, with 18.2% of listed companies issuing one. The main reasons given were delayed contracts or decisions, followed by increased costs and higher interest rates. Well, joining me now is the EY Parthenon partner, Joe Robinson. Joe, welcome to you. How are you defining a profits warning here?
So this is when a company makes an announcement to the market that their profits are going to be lower than they originally forecast.
Right, so it's not dependent on a share price movement or anything like that?
No,
then?
It's just about what they were forecasting and is it going to be lower than that.
So looking at the spread of companies that did issue, I mean, it was notable how many of them had some sort of exposure to consumers.
Yeah, I think, look, 2023 has been tough, and particularly in the consumer sector. And it's really linked to discretionary spend. That's what we're seeing. So on the retail side specifically, food has held up pretty well, but where we are starting to see an impact is around fashion as well. I can also talk around the business-to-business spend as well, also linked to discretionary spend.
One thing that occurs to me, though, is, I mean, quite often profits warnings take the market by surprise. I mean, that's one definition. It moves the share price quite substantially. Should investor relations departments of some of these businesses be doing a better job in terms of softening up investors and preparing them?
Look, I think they have to make an announcement to the market. I think it's difficult to necessarily soften them up as such, but what they are able to do is actually plan and take advice earlier on. So some of the things that corporates are doing are looking at actually what are we anticipating in the future and how do we react to that? So managing their stakeholders around that.
What I thought was quite interesting looking at your analysis was that initially it was small cap companies that appeared to be under pressure, but as the year went on, you saw some quite big companies issuing alerts as well.
Yeah, and it really did start from the smaller companies, and that's really because they're more vulnerable, have less flexibility in what they're doing, and we actually saw quite a bigger build-up of reserves and stronger balance sheets as we went into this year for the larger corporate. But actually, as the years played on, that's depleted. And I think those companies that haven't been quite as nimble and acted have been beginning to see those reserves deplete. And so, yes, we are starting to see it hit that larger corporate.
Now, when I was on Fleet Street, we had an old saying on business desks that profits warnings come in threes like buses, and it was striking. Some 39 listed companies issued 3 or more during the year.
Yeah, and it's really difficult once you get into that 3 or more warnings to get out of it. And so really it's about what are they doing to react, and what you tend to see is typically a third of those will exit whether it's a transaction or another form. So I think they're the ones that are really now taking a look at what do they need to do going forward.
So that was 2023. What are you expecting to see this year?
I think we're seeing a bit more optimism as we're going into 2024. You know, we are expecting interest rates to go down. Inflation is dropping. I think it's going to be easier, but it doesn't necessarily mean it's going to be easy. Companies are going to have to adapt to a new norm, if you like, where we do have increased costs and increased interest rates.
OK, Jo, got to leave it there. Good to see you this morning. Thank you. Some other business news stories for you now. And a satellite operator in which the UK government owns a near 11% stake this morning cut its financial targets for the current year. Taxpayers have the stake in Paris-listed Eutelsat after its merger last year with OneWeb, a company that was rescued from bankruptcy by Boris Johnson's government with the support of a £400 million cash injection. But the company said this morning that OneWeb's low Earth orbit activities were running behind schedule. Sales are now expected to be up to €1.3 billion this year, down from the previous target of €1.42 billion. A Hong Kong court today ordered the liquidation of the debt-laden Chinese property company Evergrande. The ruling came after the company, which has more than $3 billion worth of liabilities, failed to come up with a concrete restructuring plan after it first defaulted on a bond payment. Well, Evergrande said it would complete the home building projects on which it is working. Many of its assets have already been sold, seized by creditors or frozen by the courts. The fashion retailer Superdry confirmed this morning it is working with advisors to explore the feasibility of various material cost-saving options. Well, the statement follows a report from Sky's Mark Kleiman at the weekend that the company was working on plans that could lead to a company voluntary arrangement or restructuring plan. This would probably involve closing underperforming shops with accompanying job losses or forcing through rent reductions with landlords. Now, the UK housing market has started 2024 strongly, according to Zoopla, the online property portal. It says UK buyer demand is up 12% this month on last year, while sales agreed are up 13% year-on-year, with Yorkshire and the Humber and the West Midlands leading the improvement in new sales. But Zoopla also warns that a fifth of home sellers are having to cut their asking prices by 10% or more. Well, joining me now is Richard Donnell, Executive Director of Research at Zoopla. Richard, good to see you this morning. Worth noting that house prices are still falling year-on-year in your index.
That's right, they're down by nearly 1% year on year, but in Scotland, Northern Ireland, the north of England, they're actually in slightly positive territory. So the big drop in prices came last year. That improvement in sales we're seeing is seeing prices firm.
So what's this increase in demand down to? Is it all down to interest rate expectations starting to people pricing in a rate cut?
Yeah, I think the drop in mortgage rates over the last 6 weeks has really brought people back into the market. I think we had a pretty weak second half to 2023 as everyone sat back waiting to see what the outlook for rates would be. So it's really pent-up demand returning to the market. And look, it's really positive news that sales are picking up because that shows willing buyers, willing sellers are agreeing prices.
I mean, you do make the point. I mean, despite this rise in demand, you still see this as a buyer's market just now. Why is that?
Absolutely. I think it was always going to take more than a year for the housing market to adjust to this big increase in interest rates, mortgage rates, double where they were at the end of 2021. And yes, we're seeing that, in the south of England, 1 in 4 sellers is having to accept more than 10% below the asking price to agree a sale. So there's still a realism piece here for sellers having to get real about what their home's really worth, because, borrowers of anyone using a mortgage has still got 20% less buying power than they had 2 years ago.
Absolutely. Why do prices of properties get overpriced in this way? Is it estate agents being a bit too sort of optimistic and bullish?
No, I just think sellers, everyone knows what they need to get for their home to unlock their next move. More than half of people looking to move are upsizers. So, you don't want to sort of give away too much on your house. So I think it's probably more seller over optimism on price. And look, I think agents, and the message we're giving to sellers is, if you're serious about moving in 2024, you've got to price realistically.
I mean, we had the Foxton CEO on the programme last week. I mean, he seemed quite optimistic for the London market in particular, and you've picked up on that as well.
Yes, look, affordability's been improving in London. I mean, London's still expensive. But London's house prices have pretty much gone sideways for 7 years in London. So as incomes go up, affordability improves. It's still expensive. But I think there's, the more affordability improves, the more we'll see activity levels increase. And I think what all industry wants, house builders, estate agents, lenders, is we'd love to see more people moving rather than house prices going up. Yeah, there's been a real mortgage price war over the last few weeks. You kind of think that's done and dusted for now. You don't see many more big price cuts. Well, I think, mortgage rates starting with a 4.5%, that's enough to support the housing market. I think it's unlikely they're going to go much lower than that, but we'll have to wait and see what the money markets think to rates. But 4% mortgage rates are enough to stimulate housing activity, and hopefully we might see sales volumes pick up more than we expect this year. You never know. Richard, good to see you as ever this morning. Thank you. Still to come here on Business Live, we'll have a look at how the markets have begun the week. Don't go away.
I mean, she's a very interesting woman. The more you kind of get to know her, the more you want to know about her, really. She's an absolute pioneer for education, for equality, so for women's equality, and in general, the power of education. The fact that education gives you the opportunity to do anything, anywhere in the world. She really sort of paved the way for that idea of education opening doors. I mean, I think there's different aspects of proving sainted today. So there is partly the miracle element, which sadly we don't know too much about. So there are things kind of ongoing on that front that are necessarily kept confidential, while they're being investigated. So the other element of it is proving, relevance to today's society. So it's not just a woman from Yorkshire 400 years ago. She's a woman who changed things, who is relevant to today, who talks about values that we can identify with, and who people should know about. So it's not just about that well-known bit of it, it's the other side of it as well, the idea that it's something of relevance to today's society and something worth celebrating. The followers of her order are still changing, education. So there's been recent legislation in South Sudan that her sisters have actually influenced her order that's working there currently to provide education for young girls. So for Mary Ward herself, this is at a time where philosophers are debating if women even have souls or not. So women are just seen as, wives and mothers, that's all they're there for. And Mary Ward says that they deserve an education, they're intellectually as capable as boys, they deserve an equal education, they deserve all the opportunities that boys get, and with education, anything is possible for them. It's very modern as an approach.
It's like better. Fly Emirates. Fly better. Thank you.
Well, a lacklustre showing on Wall Street on Friday was followed by mixed trading for equities in the Asia-Pacific region overnight. Shanghai sold off on the Evergrande liquidation news, but losses were limited after regulators had earlier suspended stock lending, which is, of course, a key way of facilitating short selling. Well, in Europe, stocks are largely trading, well, they're pretty mixed. Look at that. They're not largely trading to the downside. It's all done a bit of a switcheroo. Only the CAC 40 keeping its head above water just now. Talking points this morning include Holcim. The Swiss cement giant is ahead by nearly 4% on news it's floating its US arm on the New York Stock Exchange. Here in London, FTSE 100 is up nearly 1/4%, led by oil and mining stocks. In terms of the percentage move as well, Schroders is the leading blue chip faller today, off nearly 4% on broker comment. Outside the FTSE 100, the vape distributor Chilled Brands is off 22% on the government's proposed ban on disposable vapes, while the vape supplier Supreme is off 7.5%. Elsewhere, the hostel operator SafeStay is up nearly 3% on a trading update, while the reinsurer Conduit Holdings is up by 10% on news full-year profits will be better than expected. On the foreign exchange markets, well, pretty quiet as far as the dollar's concerned today. Sterling unchanged against the dollar. It's up 1/3 just now against the euro. Single currency off by a similar amount against the greenback. As for the oil price, well, that rose again on Friday evening following news of the big drawdown in US crude stocks last week. Earlier today, a barrel of Brent crude hit its highest level since the 30th of November, currently changing hands at $83.67 a barrel. That is up 1/6%. Well, joining me as ever on a Monday morning is Russ Mould, the investment director at AJ Bell. Russ, good to see you this morning. We were talking to Ryanair earlier on. What did you make of what they had to say?
I mean, it wasn't a particularly big warning, was it? I mean, they were shaving the numbers down by 2 or 3%. If anything, that's just good shareholder relations for transparency purposes. In terms of the overall market, yeah, I guess we're waiting to see how the consumer pans out, but at least summer bookings sound pretty much OK. Thank you very much indeed. This row with the travel agents, I guess that's a pricing power thing, right? What do investors look for above all else when they can find it is pricing power. You can charge the price that you want to offer, not the price that the customer is prepared to pay. We've had Tesco arguing with Unilever over Marmite. The French supermarkets are involved in a row right now with PepsiCo over the price of Frito-Lays and soft drinks. So it's interesting to see which company comes out on top in those push and shoves. And previously, you know, Unilever got the better of it with Tesco, for example.
Yeah. Now, Steve Sedgwick on our sister channel, CNBC, was pointing out to me this morning that Ryanair and EasyJet now trade on identical ratings, more or less, whereas Ryanair's always traded a bit of a premium to EasyJet. I was quite surprised. I hadn't picked up on that.
EasyJet's shares aren't at an all-time high by any distance, and Ryanair's are. So some of that may be down to the fact that, you know, EasyJet's share price or earnings have come down rather than the share price has gone up, dare one say. So I think in that respect, Ryanair's probably still got a bit of an edge in terms of profitability. EasyJet's got a clear plan as to where it wants to get to, the revenues and profits it wants to generate under Johan Lundgren. But I think some of that will be earnings rather than down, rather than share price up, dare one say.
Yeah, in my experience, you don't bet against Ryanair for long, though.
No, I think they are the category killer. And I think if you're looking for one airline that can emerge from what remains a brutally competitive business, that would be the one. Because, again, they've got one of the best balance sheets as well, and that's a massive thing for airlines.
Absolutely. Now, BP, interesting situation developing there.
Yeah, now, we're normally used to oil and gas companies coming under pressure from activists to go faster towards the renewable and green transition. That happened to ExxonMobil in America with an activist investor. Here, we've got BP under pressure from Bluebell, a hedge fund saying, actually, you're going towards renewables too fast. The oil price and gas price is still quite high. We're still going to need hydrocarbons for a long time, whether we like it or not. So you shouldn't be transitioning away as fast as you're planning to do by cutting production by 2030. So a very, very different position. BP shares up today, probably more because the oil price is up in the wake of the unfortunate attacks on the American troops over the weekend in the Gulf. But nevertheless, an interesting angle, one that we haven't heard for a long time with regard to oil and gas companies.
Yeah, and if you look at how BP is traded against the likes of Chevron, ExxonMobil, but even closer to home, Shell, Bluebell looked to have a case.
You need a telescope to find BP shares compared to the American ones particularly. Shell has outperformed it by not by as much. So I think that will be part of the thinking behind the hedge funds. The American stocks, they've just been very nakedly, this is where we're going. We're still oil and gas companies, and that has got its reward in share price terms. Clearly, environmentalists won't be so pleased, and Shell is still wrestling with them in the Dutch court in The Hague, for example.
Yeah, now, what do you make of this ban on disposable vapes? I mean, the thing that puzzled me is that British American Tobacco is one of the main gainers on the market this morning.
Yeah, shares haven't really done much there. I guess British American tobacco, its shares have been pretty weak market for 3, 4, 5 years. They're kind of accustomed to regulatory pushback. For the smaller companies that we've seen down this morning, Chill Brands by a fifth, Supreme by a tenth, it'll be a bigger portion of their business, and they are much smaller companies. I think that's probably part of the reason why you've seen such a bigger reaction there.
Yeah, BAT has a very robust vaping business, and disposables is only quite a small part.
It does, but they're looking to get the next generation products, as they call them, NGPs, into profit this year, 2 years earlier than expected. I guess that's one of the bull cases for the stock. Equally, if regulatory attention now moves on to that, which it kind of feels like it will, that's potentially another challenge for the stock going forwards.
Yeah, good point. Now, what about this situation in China with Evergrande? It looked like that was priced in, but it's this ban on stock lending that's quite interesting.
Yeah, I mean, the Evergrande thing, any company, and it's got hundreds of billions of dollars of debt. Nobody's quite sure exactly where it lies. I guess the issue now is how the Chinese manage this liquidation. So people will be interested to see how many pence in the pound the creditors get for their debt, for any property that they own. Do people who put a deposit down for a house actually get it if it's unfinished? And so there's all of those knock-on effects. And what's the knock-on effect upon the banks? Now, the big banks are state-backed, so the Chinese government, I suspect, will end up wearing quite a lot of Chinese property in one way, shape or form, which means you'll get a very, very long, unpleasant digestion period, but you won't see the Chinese economy keel over because the CCCP can't afford it to do so and won't let it do so. The stock lending ban, it might work for a while, but these things, in the end, once you unlock them, you tend to then unleash the animals that have been caged up anyway. So in that respect, it's pretty difficult to keep a lid on that for too long.
Yeah, Russ, got to leave it there. Good to see you as ever this morning. Thank you. That's it from me. I'll be back with our afternoon edition at 4:30. Hope very much to see you then. In the meantime, do stay tuned. Coming up next after this short break, Wilf's going to be back. See you later on. Cheerio.